Hello, everyone. In today's video, we dive into the latest article by Dr. Turki Faisal Al Rasheed, published in Arab News.
Trump's debt revolution. Birthing a fairer U.S. or a monster.
Before we begin, let me introduce the author. Dr. Turki Faisal Al Rasheed, a Saudi businessman, academic, and thought leader. As an adjunct professor at the University of Arizona and advisor, American University of Beirut, Faculty of Food and Agricultural, Dr. Turki Faisal Al Rasheed, founder of Golden Grass, Inc. He brings a rare blend of vision, expertise, and real-world insight to every article he writes. Dr. Al Rasheed is also a distinguished author. His upcoming book, Saudi Arabia, Transformation, Uncertainty, and Sustainability, explores the kingdom's evolving economic and social landscape amid global change, offering deep insights into development, resilience, and long-term sustainability.
It is Saturday, January 17th, 2026. Welcome back to the Deep Dive. We are exactly 1 year, 365 days into Donald Trump's second term in the White House. And honestly, if you thought the first year was quiet, well, you haven't been paying attention. But something has definitely shifted in the last few weeks.
It really has. If you look back at the first term, or even the early days of 2025, the narrative was always what critics called organized chaos.
Right. The travel bans, the trade skirmishes.
Exactly. The battles with the media, it was loud, it was very cultural. But right now, the focus has lasered in on a singular raw nerve in the American electorate: economic pain.
Right. The culture war has sort of morphed into a wallet war, and the president has dropped a policy proposal that is, well, audacious is probably the polite word for it.
That's one word for it.
He wants a hard, federally mandated one-year cap on credit card interest rates at exactly 10%.
Which, just to be clear right off the bat, is a massive departure from the status quo. I mean, we aren't talking about a small trim here. We are talking about slashing current rates in half, or even by 2/3 in some cases.
So you have champions of the plan calling it credit fairness, a shield for the working class. But Wall Street...
They're using words like catastrophe, economic apocalypse.
So today we're going to unpack this showdown. We're working from a fascinating, really multi-layered analysis by Dr. Turki Faisal Al Rasheed, a special contributor to Arab News. And the mission here is to figure out, is this 10% cap a lifeline for people drowning in debt? I mean, is it a real solution? Or is it a blow to America's financial heart that could actually trigger a recession?
And the clock is ticking. The deadline Trump has set is January 20th.
The anniversary of his inauguration.
Right. So the stakes couldn't be higher.
Okay, let's get into it, because to understand why this is such a big deal and why the banks are freaking out, we have to look at the reality on the ground right now.
And the numbers in this report are, well, they're staggering.
They really are.
The source points out that right now, the average annual percentage rate, or APR, for credit cards is sitting at 22.3%.
Wow.
And that is up significantly from pre-pandemic levels.
22.3%. Just for context for you listening, if you're carrying a balance, almost a quarter of that debt is just interest compounding every single year.
It's a huge amount of money.
It's just disappearing into the ether.
It is. And Trump is using his platform, specifically Truth Social, as a, quote, digital bullhorn to really hammer this point home. He's railing against rates that sometimes climb to 20 or even 30%.
On store cards or for people with lower credit scores.
Exactly. He's calling it a brutal tax on families who are already dealing with, inflation and flat wages.
And the scale of the debt is the other part of this. I mean, the numbers in this report, they made my jaw drop. Total U.S. personal debt has hit $17.5 trillion.
$17.5 trillion. And credit card balances alone topped $1.1 trillion back in 2025.
It's a mountain.
It is a mountain of debt. And here is the key insight from Dr. Al Rasheed. For the average family, this isn't about luxury spending.
Right.
We aren't talking vacations to the Maldives or designer handbags. This is about paying for groceries, covering doctor visits, paying for car repairs, just to keep going to work.
So that revolving debt just feels like a noose tightening with every single statement?
Yeah, exactly.
So Trump's solution is this 10% cap. But how? How does he actually plan to do it? Because usually the Fed touches interest rates or the market decides. Presidents can't just wave a wand and change the price of money.
Well, here's where it gets really interesting from a tactical perspective. The plan is to use a direct executive order if Congress drags its feet.
Okay.
But it's more than just legal maneuvering. The analysis describes it as a calculated psychological offensive.
A psychological offensive? That sounds aggressive.
It is. It's about bullying the banks into compliance before a law even passes.
Yeah.
He's threatening to label non-compliance as violations and is dangling massive fines under emergency powers.
He's essentially casting himself as the champion of the people against the predatory giants.
It's a very populist frame. The people versus the banks. And in terms of messaging, it's very effective.
But obviously, the banks aren't just going to roll over and say, sure, take our profits.
Not at all.
Yeah.
And this brings us to the counterpunch from Wall Street. We're talking about the heavy hitters here. JP Morgan Chase, Citigroup, Bank of America, Wells Fargo.
Yeah.
They are terrified.
Yeah.
And the source explains that it's not just about greed. It's about risk management.
Right. And this is where I want to push back a bit on the greedy bank narrative, because obviously banks want profit, but is it actually possible for them to operate at 10%?
It's the billion-dollar question, isn't it?
Or are they just crying wolf?
Well, to answer that, you have to understand the mechanics. Credit card lending versus, say, a mortgage. If you stop paying your mortgage, the bank takes your house.
Right.
Stop paying your car loan, they take your car. Those are secured loans.
There's collateral, a physical asset they can seize to cover their loss.
Exactly. But credit card debt is unsecured. There is no collateral. If you max out your Visa on a nice steak dinner and a tank of gas and then default...
The bank can't repossess your dinner.
Right. It's gone. They take the full loss.
So the high interest rate, it's like an insurance policy for them.
Precisely. Banks anticipate a default rate of about 3 to 5% a year. Then they have their own borrowing costs, operational costs. They need those higher rates to build in buffers for bad debts.
So if you force them to cap the rate at 10%...
Math just breaks. The source suggests that if rates are capped at 10%, up to 80% of current credit card users could become unprofitable.
80%?
Overnight.
That is, wow. So if I'm a bank manager and 80% of my customers are suddenly losing me money, what do? I can't just run a charity.
You stop lending to them. You cut them off. This is the core of the warning from Brian Moynihan, the CEO of Bank of America. He was quoted saying, "This would mean tighter credit and lower limits."
Which creates a massive paradox, doesn't it?
A huge one.
The policy is meant to help people who are struggling, the people who need that credit. But the reaction from the banks might just slam the door on them.
Just when they need it most. That's the fear. Imagine facing a layoff or a health scare. In the current system, yeah, you might pay high interest, but you have that credit line available.
It's there.
Under this cap, suddenly your credit limit is slashed from $5,000 to $500, or your card is just canceled entirely because you're now high risk.
So the people Trump is trying to save might be the first ones thrown overboard.
To save the bottom line.
Exactly.
And it's not just the big banks, like JP Morgan or Citi. The source mentions niche players.
Like Capital One or Synchrony Financial.
Right. These are companies that get 90% of their income from interest and fees.
So they don't have investment banking arms or wealth management to fall back on. They live and die by that credit card spread.
Their profits could essentially vaporize. And if that happens, what do you think we'll see?
Higher annual fees. Sneaky admin charges.
You got it. You might get your 10% rate, but now you're paying a $200 annual fee just to hold the card.
Okay, so let's zoom out. What does this all mean for the economy as a whole? Because if people can't use their credit cards, does that just mean we buy fewer flat-screen TVs? Or is it bigger than that?
It's much, much bigger. We have to connect this to the macro picture.
Yeah?
Consumer spending drives 70% of U.S. GDP.
It's the engine.
It is the engine of the American economy.
Mm-hmm.
And credit cards are what grease the wheels for everything from, weekend splurges to big-ticket items like a new washing machine.
So if credit tightens,
spending stops. And with inflation still stubborn, still around 3 to 4%, a sudden credit crunch could easily nudge the entire economy into a full recession.
But surely Trump's economic advisors know this. They can't be flying blind. So what's their counter argument? Why risk it?
They argue that these are just growing pains. Their view is that the current debt bubble, that $1.1 trillion, is unsustainable anyway.
Mm.
They believe we need to puncture this balloon safely now. They'd rather deal with short-term pain than risk a massive 2008-style explosion later on.
So it's a controlled demolition versus an accidental collapse.
That's the theory.
Yeah.
But it's a gamble, a massive gamble. And presumably, before we even get to the economics, this is all going to end up in court.
No, absolutely. The source predicts a marathon brawl. Congress usually handles these kinds of things, usury rates under the Truth in Lending Act.
Right.
But the banks are going to go constitutional on this.
Right. They're going to argue that this executive order is unconstitutional theft under the Fifth Amendment.
The Fifth Amendment, that's usually the right to remain silent, isn't it? I plead the Fifth.
It is, but it also contains the takings clause.
Okay.
It says the government can't take private property for public use without just compensation. So the banks will argue the government is taking their property, their potential contractual profits, without due process.
I can see the argument. I mean, if I sign a contract with you for 20% interest and the government says, no, you only get 10, they are technically taking that difference from me.
Exactly. I can just imagine the injunctions flying already. But the source hints at a different strategy here.
What, that Trump doesn't actually expect the 10% to stick?
It's a fascinating possibility, isn't it? That this is really high-stakes haggling. He might be using the threat of the brute force approach to wring out voluntary concessions.
Classic deal-making tactics. You start with an extreme position.
I'm capping you at 10%.
Knowing you'll settle for something else. Exactly. Maybe he gets them to agree to lower rates to, say, 15% or roll back late fees voluntarily.
And in exchange, he drops the executive order. He still gets the win, the banks avoid the catastrophe, and the courts stay out of it. It's the art of the deal applied to federal policy.
Okay, I want to pivot a bit here, because what makes this deep dive so unique is that Dr. Al Rasheed doesn't just look at the economics, he looks at the philosophy behind it. He uses a term that really stuck with me: savage capitalism.
Yes. This is where the analysis goes from the tactical to the structural. Dr. Al Rasheed argues that we need to confront a deeper sickness, that the West, which used to be the high priest of free market gospel, has, well, it's twisted human potential through this debt mechanism.
And he brings in Maslow's hierarchy of needs. Now, I haven't thought about Maslow since, Psych 101. Walk us through how this applies to credit card debt.
It's a brilliant analogy. So you know the pyramid. At the very bottom, you have survival food, shelter, water.
The basics.
The basics. Then you move up to safety, social bonds, and eventually self-fulfillment at the top. Creativity, legacy, morality. The goal of a prosperous society should be to help people climb that ladder.
Right. To move from just surviving to actually thriving. To think about who you are, what you want to leave behind.
Exactly. But the argument here is that debt has broken the ladder. The source argues that endless consumerism, this buy now, pay later culture, has flattened the pyramid.
So people are stuck.
They're stuck in a frantic scramble at the base.
Because if you're spending a quarter of your income just servicing debt, you're not thinking about self-actualization. You're not writing a novel. You're thinking about survival.
Precisely. You are trading a moment of instant joy, a purchase, for what he calls chains of repayment that last for decades. It keeps the population focused on the immediate grind.
Chains of repayment, that is a heavy image. But does the data back that up?
Oh, the data on inequality is stark. The source cites an Oxfam analysis from 2023. It shows that the top 1% captured $26 trillion of new wealth since 2020.
Wait, hold on. 26 trillion in just a few years?
Yes. And a more recent Oxfam U.S. snapshot from just a couple months ago, November 2025, shows the richest 1% are piling up wealth 987 times faster than the poorest 20%.
987 times faster.
Yeah.
It's hard to even wrap your head around a number like that.
It creates a gulf so wide that essentials slip through the fingers of most people. And when central banks try to cure inflation by hiking rates, who pays the price?
The people with the debt.
It just fattens credit costs for the poor, while the wealthy collect higher interest on their savings. It's a bitter cycle.
And this leads into the other unique angle in this report, the view from the Arab world. How is this perceived globally?
It's seen with a mix of sympathy and critique. Dr. Al Rasheed writes from the vantage point of Saudi Arabia and the Gulf. He notes that the West exported this excess, this shopping frenzy that gutted heartlands, from American factory towns to the gig economy in Europe.
And he compares it to what's happening in the Gulf now, right? With Vision 2030.
Yes, exactly. He mentions Vision 2030, which aims for fair finance and debt forgiveness as a core tenet. There's a sense in the analysis that the U.S. is a fading superpower. The dollar's debt empire is being chipped away by things like BRICS and the rise of Gulf economic giants.
So in their eyes, Trump's battle with the banks is what? A symptom of that decline.
A spotlight on the rot. The source argues that for many around the world, free markets have come to mean the liberty for elites to harvest everyone else.
Wow. That is a scathing indictment. Liberty for elites to harvest everyone else. It really questions the fundamental promise of the American system.
It does. But it frames the stakes perfectly. This isn't just about interest rates. It's about the soul of the economy. What is the economy for?
Right. Is it to generate profit for the few or stability for the many? That brings us back to the central question. As we stare down this January 20th deadline, what happens next?
It really comes down to this synthesis, right? Is this cap a path to justice? Could it free a generation of Americans to chase those loftier goals Maslow talked about, family, creativity?
Or is it rousing a monster that could crash the economy and leave those same people with no credit at all?
Exactly.
Yeah.
The source has this quote that's both funny and tragic. Debt-free Americans are rarer than honest politicians.
That's a sharp observation.
And it highlights the tragedy. Too many young people squandering their peak years in these interest traps.
There was another proverb at the very beginning of the source material that I think sums this whole thing up perfectly. You can stretch your legs as far as the blanket goes.
It's a profound proverb. It speaks to living within your means, but also accepting the limits of your reality.
But that's the tension, isn't it? If a blanket, which in this case is the availability of credit, if that blanket shrinks because of this policy,
then the American dream might shrink right along with it.
Exactly. Do we learn to sleep without needing such a big blanket? Or do we freeze?
That is the question. The world and the wallet awaits.
Indeed. We will be watching closely as the 20th approaches. That's it for this.
As we conclude this discussion, we return to the vision expressed by Dr. Turki Faisal Al Rasheed, a vision rooted in clarity, innovation, and a deep commitment to shaping a more stable and interconnected future. For the full article, you can find the complete details in the description below, or visit www.arabnews.com. And if you need it full story about and to learn more about the author, visit www.tfrasheed.org. If this video gave you insight or inspired your thinking, don't forget to like, share, and subscribe for more discussions like this. Thank you for watching. Stay informed, stay curious, and see you in the next video.